All right, so we're here today with Kyle Lemonier with the Horton Group. We are going to talk insurance. Hopefully we'll be able to not put you to sleep. The goal here is to kind of answer, common questions that Kyle gets a lot, and then also some tips or tricks, recommendations on, how to save or what to look for when you're reviewing all insurance in general. So Kyle, thanks for coming.
Thank you for having me.
Yeah,
I appreciate it.
Definitely. So why don't you kind of explain the difference, because you are an insurance broker.
Correct.
Right? And that's different than a direct writer.
Correct.
And can you explain the differences there, and then what kind of insurance are you handling?
Definitely. Yeah. So first off, the first question, direct writer versus a broker. The main difference is a broker will work with anywhere from 5 to 25 different carriers for you, for the client, versus a direct writer like State Farm or Allstate, they work with one policy. So with that one policy, you get a quote, that's all they can give you is that one. Versus with the broker, you have anywhere from 5 to 25 quotes to pick from and choose from. So you have many more options, very different variations of each quote in terms of the endorsements offered and so forth. So you get a lot more opportunities and options with the broker versus a direct writer, so to say. And then the second part of that is with the Horton Group, we are one of the largest privately owned brokers in the Midwest. We work with, me personally, personal and casualty insurance, which is home and auto. We also do life and health insurance, and then we also do select, which is small commercial, and large commercial with benefits and consulting as well. So we are an all-around brokerage. We don't really have one direct area that we work with. So if you come to us, we'll basically have whatever you need.
Awesome. So it's like capitalism at its finest, where you're able to essentially shop rates and compare and potentially get the idea is to get the best rate out there, right? Yeah.
Exactly. You want to make sure that you're properly covered. We're definitely a coverage over price mentality at the Horton Group, because we don't want our client to have a $100,000 claim out of pocket just because they were underinsured. But of our 25 carriers, we're definitely going to try to put you in the best place possible. So it could be the best coverage for the best pricing. It could be, if we're very coverage oriented, it might be a little more expensive, but it's going to be making sure that you're properly covered.
Yeah, so it's all about value, right? It's not, and I have a lot of conversations with clients, and it's, it's not just about the lowest rate, but it's about the service. It's about, the overall holistic package. That's what creates and is ultimately value to the clients, right? And that's what you're helping them understand, I assume.
Exactly, and it's very important to know that when you come to a broker, it's like the Horton Group, you are going to have your own personal service agent. So that means if you have an issue, a policy change, billing question, you can always go to your personal agent instead of going directly to the company, dealing with a service center. You will have that same contact every time that you call in, email in, text in. We're always going to be there for you. And we even have a 24/7 claims manager. So you could give someone a call in the middle of the night if there's a fire or an accident. We're going to make sure we're there for you. We're going to answer the phone. And a lot of these direct writers are going that route, and a lot of brokers have not. But the Horton Group is definitely one of those that want to make sure that we're innovative, and we want to make sure we're there for our clients.
That's awesome. That's a lot of good information. So also, your broker, it sounded like you're brokering the claims as well, or helping at least service the claims between the client and the company that they end up going with.
Yeah, so if you have a claim, you give us a call, your service agent, and we do a 3-way call with the claim adjuster. So that means we're on the phone with you, we're there for you. You deal with the actual carrier in terms of the claim itself, in terms of the payout and so forth, but if you have any questions about the claim, if you have any issues with the claim adjuster with the carrier, give us a call. We'll make sure that we get on it for you, we stay on top of it, make sure you get the claim finalized as soon as possible, so then you get your money or get your car back as soon as possible.
That's awesome. And that's super important when you're filing a claim and you have no idea what questions you should be asking or how the process works. That's super value right there.
Oh yeah, and especially if it's your first claim, you don't know what to expect. You don't know how to go through the process, and that's why we have very experienced agents that are there for you, and we're able to work through it for you.
That's fantastic. Kind of circling back on overall value in making sure that your clients are covered. Let's dive into specifically, because I'm a real estate agent, and so I sell houses, and that's kind of the general topic of where I kind of want to go. But let's talk about flood insurance,
Sure.
Okay? And is that included in the policies, or is it not? And let's dive into that a little bit.
Definitely, yeah, that's a great question. It's a common question I always get, and people really don't realize that flood insurance is never covered under a regular homeowner's policy or a regular condo policy or renters for that matter. A flood insurance is a different policy altogether. So you have to purchase that outside of your homeowners. And say you have water in your basement, it depends on where that water came from, if it's going to be a covered claim or not on your homeowners. So if the water is coming from the outside in, say you leave a door open or windows open or broken window, and it's pouring rain and it comes from the outside in and it floods and it ruins your personal property or flooring, that's a flood, and that is not included under your homeowners. Versus, say your power goes out and your sub pump or ejector pump stops working and you have a backup or overflow of that water or sewage, then you need to make sure you have the endorsement sub pump or water backup overflow on your homeowners, or else that's also not included and not going to be covered. So it's very important that you speak to your agent or your broker about what you need, because you might not have these coverages, and then at that time of claim you could be out sometimes $20,000-$25,000 or more, because it costs a few thousand usually just to get people out there to remove all that water or sewage. And it's a whole process. So the flood itself is purchased through either a private company or through the NFIP. So there's two different options there. And then it is separate, like I said, from the homeowners, versus the sub pump and water backup overflow is going to be an endorsement on your homeowners. So you want to make sure that you have that included, especially if you have a basement, finished, unfinished. You just want to make sure you have some kind of coverage down there. And if you live on a slab, you probably should get some sub pump water backup overflow, just because it also includes coverage for water that comes up through any drain as well. So say you get water or sewage from the toilet or the shower or the sink, and it comes up and you're not at home, you're on vacation, then you would not have coverage for that unless you have that water backup sub pump overflow.
Interesting. So, I mean, obviously that's really important, because here in Chicago, flooding is an issue. So
Definitely.
Knowing that that's not covered and making sure that you have the sump pump coverage or separate flooding insurance is super helpful and important. Now, what if you don't? I mean, a lot of these older homes, they don't have a sump pump and they get water backup in their home. Is that covered? Is that not covered?
Yeah, it depends where that water came from.
If it comes up like through the drain.
So you still
like
need that water backup overflow coverage. So that would come up through that drain. That water coverage would be there for that. If you don't have that endorsement, then you would not have any coverage for that. And again, you could be out anywhere from $5,000 to $25,000, $50,000.
Yeah. I mean, I've been in basements where like the flood is like literally up to like someone's waist, and it's a real thing. So
yeah, and then you get mold out of that, and you have a lot more issues after the fact, even because of that water damage. So it's important that you have this coverage, because if you just suck it all out and you try to do it yourself, you're still gonna have to deal with mold a year or two from that.
Oh, for sure.
It's gonna be future problems.
For sure. Awesome. That's super helpful to me, just, kind of when I'm advising my clients as well, like letting them know like, hey, like I can talk smarter now, just based on this conversation. Let's get into like personal property and like jewelry, because I know that we were talking right before this and you were mentioning that that's something, there's a misconception about that.
Yeah, definitely. So everyone thinks that when they purchase a home or condo that they get their personal property coverage and that their jewelry is covered under that, or even their musical instruments or special fine arts. None of that is actually included under your personal property coverage. So these are things that you can buy blankets for, or you could schedule it on a separate policy called inland marine policy. And so each homeowner's policy is going to have sublimits for jewelry, maybe $1,000 or $2,000. But if you have an engagement ring that's over that, it's not really going to help you out. Again, fine arts, you have little sublimits of $1,000, $2,000 only, and most fine arts, if you're going to be purchasing it, it's going to be more than that. And so if you schedule it, basically all you need is some kind of appraisal or receipt showing the value. And then that means if there's fire, theft, mysterious disappearance, which is the biggest claim you get with jewelry, it's all going to be covered. And a good example of mysterious disappearance is if you're on a honeymoon and say your wife drops the ring over in the water and can't find it, or a diamond falls out and don't even realize it till later. That's very important, because when you make that claim, if you don't have the inland marine policy, you won't have any coverage for that. Versus you have the inland marine, you have it scheduled and appraised already, and it's already listed on your policy. They're going to make sure that that ring diamond gets replaced, or the whole ring itself gets replaced to where it was equally before the fall or before losing it. So mysterious disappearance is a huge claim that we see in the insurance world.
And as far as how expensive is that? Is it, is it very expensive? Is it not very?
It's very cheap, honestly. Yeah. So, I mean, the way we usually see it is maybe $1,000 could be $10 in premium. So you have a $10,000 ring that you want to insure for the year, it's maybe $100.
Yeah.
So it's very cost efficient to do that, and you don't want to lose a $10,000 ring and just be out everything.
Yeah.
So
Well, and it's also more than just like the money. There's also like the emotional attachment that's probably hard to put a number on there. So
I agree. Yeah.
For sure. Cool. Let's jump into, there was a question that I know that we were talking about. It was about purchase price versus dwelling replacement cost and how those numbers show up differently on the policy.
Yeah, it's another question we always see in the insurance world, especially with new home buyers, new condo purchasers. We always hear that the client thinks that we want to insure the home. We bought it for $500,000, so we want to insure it for $500,000. And in insurance, that's not something that we do for a primary home. We never try to insure for the cash value or market value. What we want to try to do is insure it for the replacement cost, because when there is a total fire loss or total claim, what the insurance is going to do is rebuild the home to where it was using that dwelling coverage. And sometimes that's not enough, sometimes it's too much for the purchase price. And a good example is, say you have a high-rise condo on the top floor of an expensive Chicago building, and you pay $1 million for that condo, and then you have a condo in the suburbs that's the same exact square footage, same amount of bathrooms, same layout and everything, but it's maybe $400,000. So those purchase prices are always going to be different, but that dwelling replacement cost between those two condos is going to be the same. So it's going to be insured for the same amount. So it's always important to make sure that purchase price is not the actual dwelling coverage, unless that's what the replacement cost analysis comes back as. And that's something that your insurance agent or broker should be doing for every new purchase. They should be doing an RCE or replacement cost estimator on the home to make sure that it is fully covered.
Now, are you seeing with the increase in material costs, the dwelling coverage or replacement cost changing, and what to keep an eye on your policy with that, regarding that?
Great question. And last few months and even late 2021, we've been seeing inflation costs go up. It's some economics, some with COVID, so forth. And so even if you are a current homeowner, your renewal probably should increase in that coverage A dwelling coverage, just because inflation is going up. So the cost of lumber, the cost of labor, everything's increasing. So the cost to rebuild your home is also going to be increasing as well. So we want to make sure that that increases. And if you don't see an increase on that, that's something you want to bring up to your agent or your broker to make sure that, hey, they're paying attention to what you need and making sure your home is fully insured. Because at the end of the day, if you have $350,000 in dwelling coverage and it costs $400,000 to rebuild your home, you're going to be paying $50,000 out of pocket to rebuild your home.
Now, is that something that you're keeping an eye on for your clients, or is that something that they should just remind themselves to look at? Or
it falls on both parties.
Yeah.
So as the agent, we want to make sure that we are seeing those increases to make sure they're properly covered. But sometimes the agent could overlook it, the broker could overlook it. So the client should also be making sure they keep tabs on their dwelling coverage. It's a quick, easy call you can make to your service agent, and it's very easy to go through it. And you're always able to do RCEs or replacement cost estimators anytime during the year. We can see exactly how much it would cost to rebuild your home. And it's never a bad idea just to call in to make sure that you're getting the correct coverage.
Yeah, definitely. All right, so I think the biggest question that I want to know, actually, let's dive into one other thing before we get to the best ways to save. But I wanted to touch on umbrella policies, what they are, why they're important, what they would be used for. Because I know a lot of investors that I work with, they use them. So why don't I'll hand it off and you can kind of explain it.
Great, yeah. So an umbrella is what you think an umbrella would be. So it covers over the top of you in case it's raining. In insurance, it covers over the top of your home and your auto. So the umbrella is extra liability protection for you. And then you can also have a sublimit of underinsured motorists under your liability umbrella. So what that means is the initial part, the liability for the umbrella is, say someone's on your property, they slip, they fall on ice, they say it's your fault. They can sue you for liability issues like loss of wages due to their injuries, the medical payments, any surgeries, so forth, court fees and fines. And so with that, you'll have coverage after that $500,000 or $300,000 on your personal liability coverage on your home runs out. You'll have that umbrella come over the top. And in an auto, say you hit someone in an accident, it's your fault, and they have major injuries, damages, emotional damages, a loss of wages due to their injuries, they can't work. That's when that $500,000 or $300,000 for your auto, after that runs out, your liability for your umbrella would come into play on top of that. So you're looking at anywhere from $1 million, and sometimes some of our clients have $10 million in their umbrella. It just depends on their assets, their future income, and how much coverage they really want to protect themselves.
In relatively speaking, it's kind of cheap for the amount of coverage. Is that correct?
It is definitely cheap. The best way to do that is to bundle it with your home and auto. That way you'll get some discounts and savings with everything. But with the umbrella, it is fairly cheap to have $1 million of coverage. I mean, price range varies for each person, but it's usually anywhere from $200 to $400 for just $1 million in coverage for yourself, which is
a year. So,
correct.
I mean,
so
that's awesome.
$1 million of coverage.
Yeah, that's pretty awesome. Because things do happen. I mean, better that you're not caught holding the bag of blank than holding it. So, all right. Well, we kind of I feel like it's a good segue because you brought up some ways to kind of potentially, what are the best ways to save when you're in insurance, when you're purchasing insurance?
The big question clients always want to know, how can I save money?
Yeah, for sure.
And so the biggest, easiest way to save money, the biggest way to get discounts is to bundle your home, auto, and umbrella if you have one. If you have that all together, it's usually anywhere from 10, 15% in savings. So that's a huge discount. And then another way that you can save if you're especially a new home buyer is make sure you look at the deductible options. So you could have a $500 deductible per claim, $1,000, $2,500, and it goes even higher up to $10,000.
Yeah.
So that means if you have a claim, you pay that certain amount, and then the insurance will take over and fix up the home and replace it to where it needs to be. But the deductibles, it could be a huge difference in savings in terms of premium. If you're willing to pay a higher deductible, then the actual rate for the year, the premium is going to go down versus vice versa. If you want a low deductible in case a claim happens, then the premium is going to be higher. And there's also different things like ADT, fire burglar alarm systems, central alarm systems. Those are huge in terms of preventing fires or helping the damage control for a fire or burglary. So those are huge in terms of discounts for the home itself. And then for auto, there's a bunch of different things like good student discount for kids and away at school discounts if they're at college, and accident free, and the same with the home, claim free discounts. Usually it goes 3 to 5 years, just is different for each carrier, but there's a few different ways you can do that. And then always looking at renewals. When you shop around your renewals, you want to make sure that you're not getting the same price over and over again for 20 years. There could be a carrier for the same coverages you're getting for hundreds of thousands of less money. In my own personal account, my parents had State Farm for 40 years, and I was able to find them better coverage at a lower rate with one of our carriers because they just trusted their agent. They just didn't want to change anything. They loved their guy, and they just never looked at it.
Yeah, change is hard, I mean, especially when you know what to expect and you have a pre-existing relationship. But ultimately, I always say this to my clients, you guys owe yourself the best experience and the best education. So sometimes you got to step outside of your comfort zone and really get the correct information. So as you bundle through a broker, is the car insurance going to one carrier? Because if you're going to a direct writer, it's all their products, right? Correct. But if I'm bundling insurance through the Horton Group, are you kind of finding me the best car insurance, the best home insurance, and then you're giving me the discount? Or how does that work, just out of curiosity?
It's a great question. So many carriers will only give you the discount if it's all bundled with that same carrier. But being with the broker, we do have, of our 25 carriers, I know 3 off the top of my head that say you have the auto with us or you have the home with us, they'll still give you that discount with them. So there's a few carriers out there that will give you that bundle discount, even if it's not with that carrier, as long as it's in the same brokerage. So if it's still with the Horton Group with a different carrier, some of them will give you that discount.
Cool. And then the last question that I have, just because we've been talking about my own personal, I'm doing a rehab in Lansing, single family home, and the property's vacant. And I need vacant property insurance. So can you talk briefly on vacant property insurance and your recommendations there?
Yeah, great. So vacant insurance is much different than a regular homeowner's. Obviously, there's no one living there.
Yep.
Insurance carriers see that as much more liability exposure because there's no one there. So say there is a fire or people just break in, there's no one there at all. So not a lot of carriers write vacant home insurance. So we are limited for most carriers out there. A lot of direct writers don't want to write vacant. And in your situation, you're doing some renovations, and that's another big issue with a lot of carriers out there. So there's a few select carriers, especially in the Chicagoland area, that we always go to that love vacant homes. That's one of their main niches. So it's important to make sure you talk to an agent about making sure that they know that there's renovations going on, making sure they know that it is vacant, because if they give you a homeowner's policy and you're doing flips and you are having it vacant and a claim happens, they could deny the claim or void it, and then you're out that money for the claim. So there's things with a vacant policy that you want to make sure you have on there. First one being burglary of materials, building materials, if you're going to be doing flips. Also vandalism coverage. So let's say someone graffitis the home, breaks all the windows or doors. That would be an important coverage, especially if there's someone living there. You want to make sure that you get coverage for that. And then you want to make sure that you have coverage for those renovations. So if you are going to put $40,000, $50,000 and then you have your insurance for what you bought it for, it's not going to be equal in the end if there's a total loss, and you're going to be out all that money for those renovations.
Mm-hmm. Awesome. Great information. Let's wrap up, and I'm going to just ask you a couple questions, like more personal stuff, if you don't mind. I'm putting you on the spot here because we didn't prep for this. But what has given you a competitive advantage in the industry that you're in amongst your peers and other people who are selling insurance and doing what you're doing? What gives you a competitive advantage, would you say?
Yeah, it's a great question. So for me personally, I actually have my degree in finance, but I minored in insurance. So I actually went to school for this. I studied this. I interned with the Horton Group back in the day doing this. I've been with them for 3 years. So my whole career has been insurance. So I know it pretty well at this point, and my boss is the president of the Horton Group for personal lines, is the head of the insurance brokers in Illinois. He's the president right now, so he's pretty high up there. My VP is on a few boards for Farmers and Safeco and different insurance carriers for their national boards. And so we have a lot of good supervisors, a lot of good mentors to work with. And for me personally, with the Horton Group, having 25 different carriers to work with versus 4 or 5 like many brokers, it's a huge help because we have a lot more options, much more to give clients. And my personal thing, and a lot of our producers that are what we're doing now, is we do side-by-side comparisons. So you come to us with a quote from State Farm or a different agency, and you give us a full quote. We'll be able to match that apples to apples, and then we'll be able to see if you're missing different coverages, or this is high or this is low. We'll do those replacement cost analysis to verify that. And then we will also make sure that you're getting the best coverage for the best price. So we're going to give you that value, and we're going to make sure that you're fully covered. And even if you go with the other broker or the other agent, that's okay. We did our best to educate the client, and we did our best to make sure that they know where they stand for each quote and what they have versus what they do not have.
Awesome. That's great. What are things that you do when you're not selling insurance? What are a couple things that you do to relax or hang out, or that you are hobbies of yours?
Definitely. So I'm huge into working out. I love working out with my roommates. We go to Wicker Park Athletic Club, so we love going there. Huge sports fan, so any sports that's on, I'm usually watching it. I like trying new places for restaurants. Huge sushi fan, so if you got any recommendations, let me know.
Yeah, cool. And then actually, 2 more questions. One, are there any good podcasts? They can be motivational or just like interesting to listen to. Podcast or book that you're reading or have read recently or listened to?
I'm a huge Barstool guy.
Oh, okay.
So
yeah, there you go.
I listen to a lot of their podcasts. My biggest one, Part of My Take. I like the dog walk. I actually worked with someone in the Chicago office for Barstool. He used to work at the Horton Group. I listen to his podcast a lot. I think it's really funny that I met him before, and now he's doing these big time podcasts and things here in Chicago. It's really cool.
You never know who you're hanging out with. And then the last question, or I guess the last thing that I would like you to kind of bring up is, where can anybody that's watching this, where could they find you? How can they get in contact with you?
I'm on LinkedIn. It's just my first name, last name, Kyle Lemonier.
How do you spell that? Because I'm sure that everybody's like...
So it is Kyle, and then my last name is Lemonier.
Okay, perfect. And so LinkedIn is the best way?
LinkedIn. I have Instagram, Kyle, I think it's _lemonade. So it's a play on my own name.
Yeah, there you go. I'll put some links into the show notes or whatever, and so people can contact you there. Hey, I really appreciate you coming out, taking some time to talk insurance with us and explain the details of it. So
thank you for having me.
Thanks a lot for having me.
I really appreciate it.
Yeah, definitely. If you have any questions about what you heard today, feel free to DM me and I will be sure to answer your question and get back to you right away. Thanks for listening.